Hey everybody, welcome to Dumb Investing. You'll notice I'm running solo again. Mondays are going to be that way for a little bit. Harry's got some extracurricular activities that are taking him away from the market. So for those of you joining us, welcome to Dumb Investing, dumbest investing channel, all the YouTubes. It's about to get dumb up in here. That's right. This is the channel where we roll random dice. We pick random stocks. We've built a whole portfolio doing that. And we're going to do that again tonight. We're going to roll some dice. We're going to check out that portfolio. And I'll give you a little bit of commentary on what to expect this week because there's going to be a whole lot of stuff to talk about when we do our market recap. So let's go out. Let's roll some dice. Let's have some fun. All righty. So to get this thing started, we go out to random.org where we have random dice roll. And we rolled a 5. We go out to a random stock picker. We click that thing 5 times. 1, 2, 3, 4, and 5. And we do this because we are not paid to sell anybody's stock or any of that. This is teaching how the market works. And so we thought this was the best way to do it, is to teach people how we do research on stocks in our private lives by picking random stocks. 1, 2, 3, 4, 5, 6. And we'll see if we can actually pick some decent stocks one of these days. QNRX is the second stock we're going to look at tonight. Our final stock is being brought to us by a roll of a 1. Plain and simple, ACA. All right. So normally, Harry, the smart guy, would be using Webull, which is our trading platform. Down in the link below, if you click that link and you put in $100, they're going to give you 2 free stocks. You can be an investor just like that. I'm going to go out and use Yahoo. And we're going to learn a little bit about these 3 companies tonight, or 3 stocks. And we're going to decide which of these 3 we think we should invest our hard-earned retirement money in. So first one is Arcosa Inc. Let's see what Arcosa Inc. does. All right, so they provide infrastructure-related products and solutions for construction, energy, transportation markets. All right, so infrastructure, 6,400 employees, pretty big. They're in Dallas, Texas is where they're headquartered. A lot of people are because Texas is very business-friendly as far as taxation and things like that. Doesn't mean they do a lot of work in Texas. That's just where their headquarters are. So what do we know about these guys? So these guys, over the past 4 years, have shown a fairly decent growth in revenue. Revenue went from $1.46 billion to $1.94 billion. Their earnings, which is another way, basically, you can call it their profits, 89 million, 75, 113, 106. So they are profitable. Their revenue is growing substantially quicker than their profit is. So that's something we could look at. Let's see, how do they do? So for the most part, 3 out of the 4 quarters are showing us they have beat the market expectations as far as what they thought they were going to do. These are earnings per share. That is how many profit dollars they have per share outstanding. So whoever owns part of that company, that's how much profit they're getting for each share that they own. So what's happened to them? Let's look at the last year. Let's look at 5 years. That's what we generally do, right? And we generally look for that dip that happened in COVID. And man, these guys have just been screaming out there. Now, is that because COVID, there was kind of a break in construction? You know, there a lot of things slowed down. And so are they getting caught up right now? And are they riding that wave of the infrastructure bill? Back here in March was when, you know, our Congress and everybody were first talking about it. And, you know, as usual, they haven't done a whole lot lately. I don't know about this one. I don't know if this was one of those buy the rumors and then sell the news things. There may be some work coming their way due to that. But yeah, they're a big company. $2.6 billion is their market capitalization. That is how much they are worth when you take the amount of outstanding shares times their share price. And that's how people value these companies, or how the market is valuing them anyways. So they have a lot of volume. That's probably a good thing. We could probably buy a fractional share if we wanted to. And let's see, how bad did Friday hit them? So Friday hit them pretty bad. Dropped down, 4% on Friday. Had a nice little bump this morning, and it didn't really turn out to be anything. I don't know. This could be a play. This could be one of those things where they get $4 in the next couple of days and kind of get back up here to where they were. We'll have to see. There could be a lot of fear with the new COVID string that maybe some of the stuff isn't going to happen like everybody planned. All right, so that was ACA. Let's go look out at, right now it's kind of middle of the road for us. QNRX. All right. Pharmaceutical company. Now, you guys have seen us. We've looked at pharmaceutical companies before. Most of them are tiding things that do nothing but lose money while they're trying to figure stuff out. It's one of those things where one day one of them is going to hit it out of the park, and how many people are going to walk by it, So what do? They potential therapy for, I don't know what that is. I don't know what any of that stuff is. I can't even say some of that stuff. 2 full-time employees. I don't know how much work they're doing. One of them is probably the guy that started the place and is doing all the paperwork and homework, and is the other one a CFO? I don't know. This one doesn't do anything for me. Kind of freaking me out a little bit. All right, FTGC. All right, so First Trust Global Tactical Commodity Strategy Fund. That is a nice, big, long fund name. And they had the COVID dip like everybody else. Prior to COVID dip, they had a year where they kind of just hung out, right? Not a whole lot happening. But man, after COVID, they have just skyrocketed. I would assume that's probably an all-time high for these guys. Oh, no, look, when they first opened. Okay. When they first started trading back in the early teens, they were rocking and rolling. Now, these guys are doing, let's see what they're looking at. This investment seeks to provide total return by providing investors with commodity exposure while seeking a relative stable risk profile. All right. They investing in commodity futures contracts, exchange traded commodity linked instruments with subsidiaries. I don't know, and they're probably going to charge us to do that. So their top holdings, they're holding a whole lot, 21% of their company is in one subsidiary, which, all right. I don't know about that. They're charging you almost 1% to go out there and do this work that they're doing. Now, they have been fairly good at it these last few years. I mean, they have come out of COVID pretty dang strong. Is it over? Have we seen the peak, though? Do these guys go back from 16 to 18? They hardly did anything. They just kind of chugged along. What's going on? There's that world could be pretty crazy. I think our best bet is probably that first one, that ACA. Let's go back and look at them one more time. That is going to be a play on the infrastructure bill and these guys getting some work. And I hope we're not buying them at the peak. Let's see. We're looking at that Friday. Yeah, that Friday dip. Maybe we get back up around. All right. So if we can find one of these guys, we'll buy a fractional share. We'll probably buy a third or a half share tomorrow. But that's where we're going to go. We're going to go with ACA. All righty. So that's how we evaluate these stocks. And what we're going to be doing is we're going to be putting together some classes where we're going to walk through and we're going to look at each of these and break these down into a little bit more data as to why we look at them and what is going through our head. Because sometimes we don't talk enough as far as when we see these things, what does this do? Why is this important? What is a P to E ratio? Why does it even matter? We'll go out and we'll look at some other companies that, a successful company. We're going to have a whole lot of fun doing that. All right, so it's on to our portfolio. So let's see our portfolio. All right, today. So how did we do today? Let's see. There's a fair amount of red. There's a lot of green, but the greens look fairly small. 2%, 2%, 1%. The markets themselves kind of came back. Friday was hellacious. Friday was horrible. It was one of the the worst days that I've ever had personally. And I think the markets, it was a really bad day for the markets. So for us, good side, we've got Centennial Development at 2.5%. We've got the copper's up finally, but look at that, came up 2.1 for the day. After hours, it's lost it all, 2.3 back down. So that one really didn't move at all. Let's see, 100. So our top 5 are really boring on assignment. Nice to see them up there. FMC, haven't seen them very often. Darden is a new one to the group. Worry Bank used to be a very high flyer for us, and it's good to see them green. See how our losers are doing. And yeah, we have quite a few losers. You'll notice the losers are much larger than the winners were. Biggest loser is Butterfly Network. Now, they lost 5.4 during regular trading. They came back by 1% at night. I don't know exactly why, but you guys remember we did double down on Butterfly. They had a horrible day. They were our biggest loser one night. We ended up buying them the next day, thinking we would kind of spread out the pricing on that group. It hasn't really worked for us for that well. San Juan Basin, down 4% today, almost 5, up 0.29 in the after hours, so it's nice to at least see them doing a bounce. Worthington, VTV Therapeutics, and our friends at BurgerFi still there. Green Lane Holdings is down again, but they are cleaning up about half of that after hours. This is another one that had a horrible day for us. We did a double down on it and kind of helped us out immensely there. So yeah, so today wasn't the greatest of days for dumb investing stocks. We did have quite a few greens, which is a good thing to see. Let's see how overall we're doing. I don't even want to talk about it because, man, Friday was a bad day. I don't even want to. We haven't seen it yet. Okay, so Friday, holy cow. We lost how much on Friday? $42 on Friday? Is that? It's not telling me. We have to just assume it's right around there. $42, I think, is what we lost on Friday, which was our biggest loss. I mean, you can see these are our loser days. These are our winner days. And man, that was just a horrible, horrible loss. Today, down $6.79. Horrible, horrible day for us. Now, something that we look at from time to time is how we are doing compared to the market. And there's been a couple of months where we outdid the market, and it looks like there was a lot of pain on Friday. Ours wasn't as bad as the market, but ours didn't bounce back as much as theirs did today. So we're pretty much tracking the market here. Market had a really good couple of days here where we didn't get to participate in as much fun as the market did. And, what we will probably want to start doing is we will probably want to start looking at some of our biggest losers and see, when do we want to get off the bus? You guys will remember we were looking at, we owned, let's see if we can find it here. How do we find it? Find it here? We owned, nope. How about here? We owned Zillow for a while. You guys remember that, right? Well, we got out of Zillow when it was around 40. Was that around $40? No, we got out of it when it was around $90. You guys will remember right here when it started falling off a cliff, and we had decided, we thought, we were joking, thinking they were going to be a $20 stock one day, and it's been nothing but down, 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 down every single day since we got out. So maybe we need to start looking at some of our losers and just saying, it's time to just cut them out. We can't watch them all go to zero, which, there's some of those on that loser list that we don't have as much heart in them as we thought we did at one point in time. So we may have to start doing that. We should maybe also talk about locking in some of our profits, because you guys will remember our top 5. We got Worry Bank, Now on assignment, Alter, Simon Properties in the top 5. That's amazing. Didn't think that was ever going to happen. But you guys remember, we had some of these that were up here in the 25, 26, 28s. We could have locked in some real good profits. Maybe we need to start getting rid of some of these that just, like this Brazil, we just think it's going to come back one day. Just wonder when. Right now, we don't have to sell. We've got plenty of money in the bank to keep our show going. But, man, maybe some of these guys, we just have to say, Like, this guy has been sitting around forever. And maybe that thing's just never going to come back, and we just cut our losses now and we start doubling down on some of the things that we think are going to do really good. So that's some stuff for us to think about. We'd sure love your comments, man. If you've got ideas for us, shoot a comment down there. There's a lot of them. We get a lot of them on the side from people that watch, and they're afraid to put comments in there. That's one of the reasons we're going to start doing some of our classes. We've had a lot of people ask us questions off camera that we think everybody on camera would also like to see. So that's Dumb Investing, man. Thanks for spending your time with us. We'll be back tomorrow night around Thursday-ish. We're going to do a market recap. We're going to talk about the fall on Friday, what caused that, and other things that are going on. So thanks for joining us. Powell and Yellen are talking tomorrow to Congress. That ought to be fun. Pay attention to that. Shot for transitory? I don't know. You guys have a good night. Thanks for joining us.